Hey there, it's Shawn. If you're a business owner, you might be wondering, what expenses can I deduct on my business tax return? And this actually was a question we asked for viewers and people who watch the channel to ask questions and to tell us what they want to know. And this is one of the things that popped up. So I want to spend a little time covering it today to help those of you that might have a similar question with it, right? So we do try to respond to viewer questions here on the channel. People write in. We obviously can't give people legal advice for a situation, but we can cover topics generally, get people pointed in the right direction, help them on their journey to be a better business owner, and meet with their lawyer to get their specific advice they need. So what can you deduct? You can deduct things that are ordinary and necessary to the business on your business tax return. And this is coming directly from the IRS publication 535. I like to get into IRS publications when I can because in general, I've found the IRS does a pretty good job, believe it or not, of describing things in advance. So if you have real questions, start digging into those IRS publications. We'll drop a link in the comments and the notes to this video or actually the notes to this video for IRS publication 535. So go scroll through and you'll see it. In the publication, it says it has to be ordinary, which means it's basically something they would expect in your industry, paraphrasing there. And then necessary, which is you need to do it in furtherance of the business. And if you read through publication 535, they start looking at examples of different expenses and giving you some rules and regulations around it. So in general, those things that are ordinary and necessary will be deductible. Some special rules pop up for things like meals and travel. They have specific rules over how they work, so you'll want to look at those and understand those. The best thing you can do is really sit down with your accountant as you're building your business. You're going to want to set up a good accounting system with your accountant / bookkeeper and or whoever working that to make sure as those receipts come in, they go into the right categories. You can also, as a business owner, be proactive here. If you get a basic understanding of those rules, such as travel, which will have rules around days of the week, how long you travel for, how you allocate your time between business and personal. If you get all of those rules down with your accountant and bookkeeper, you can actually be proactive and plan your trips around their tax deductibility. This can give you a real boost to your expense side. One note, of course, is when you're doing this, you want to see how it's flowing on your financial statements. Accounting and financial bank statements and your statements for IRS and your IRS tax returns, they may not be exactly the same, right? There are different rules for deductions and expenses based on accounting rules and based on IRS rules, but in general, the two of them are somewhat interlinked. And so as you start to increase deductibility of expenses, what some business owners find is that they then make their financial statements not look as pretty. So you want to balance those two and how you do that. You want to be spending money and generally deducting it on your taxes because it's going to bring your tax bill down. But you also don't want to make your business look so expense heavy that a buyer in the future or people you're dealing with, you might want to get a loan or something, would say, hey, this doesn't look like a viable business, right? So you got to balance those two between, the extreme of deducting lots of things and the extreme of not having strong financial statements. So balance those two, but get an understanding of these rules. These ordinary necessary expenses should be deducted. You should be keeping good records of them as the expenses go in. That's going to then allow you to prepare the tax returns, make sure you don't lose deductions. This is why it's great to have an ongoing accounting system with your accountant, bookkeeper, or whatever team you're putting together to make sure all this stuff's getting recorded. So when those tax returns flow, you don't have any issues with that. So I hope that's helpful. I hope it's pointing in the right direction. So start tabulating that stuff. Look at publication 535. It'll give you some great guidance. Look at the specific areas where your business is spending money. Spend some extra time on things like travel, meals, and entertainment, where there are very specific rules over how things are structured. Get all that recorded. And then build the right systems around it. Like so many other things, it's systems and processes. We always welcome your questions here on the channel. Please keep them general for questions and comments. Don't put anything there you don't want other people seeing, because these social media channels are public. Other people may see your comments, so don't want that happening. For confidential communications, reach out to an attorney of your choosing. Have that private conversation about what's going on. And I hope you subscribe to the channel so we can join each other for more videos soon. We have a whole library of past videos that I do hope you go check out and enjoy too. I'll see you for another video soon, folks. Thanks for tuning in.